Welcome to the Wealth is in the Details podcast. In this podcast, financial planner Peter Raskin helps families and business owners understand and prepare for their wealth journey. Along the way, thoughtful and detailed planning can provide clarity and confidence as clients confront a multitude of financial decisions. Listen in as Peter shares stories and insight into people's wealth journeys. Now, let's get into today's podcast.
Good morning, everyone. This isn't my usual 20 to 30-minute podcast about a specific financial planning concept or topic. It's really just a quick 10-minute check-in with clients and listeners. And I'm here with Eric Johnson, and it's Monday, March 16th, 2020. Here in the United States, it's really quite a different world than it was only a few weeks ago. The COVID-19 outbreak and the repercussions from this illness are really affecting, I'd say, most Americans. As a matter of fact, I've been self-quarantined due to possible exposure. I've been working from home for the last week, and we were just told today that our office is closed and all the staff are working from home.
Wow, Peter, thank you so much for taking the time to do this quick podcast. So you're saying all the office is working from home, which like many people around the world, that's what we're kind of all doing at this point.
Yeah, it's actually been really busy, and thank goodness for the technology that we're able to utilize now. We've really been able to take care of our clients during this extraordinary time, and that's why I really wanted to just quickly pass on my thoughts to our listeners, and hopefully they'll hear this soon after its recording and its publication.
Yeah, we'll be turning this one around very, very quickly. And I love the fact that you're still available, right? I mean, we're speaking by phone right now. This isn't your normal microphone radio voice, Peter. And that's because you're on the phone at home, which I'm sure you've been on the phone a lot. So, yeah, what do we need to know for today?
Yeah, so first I just want to tell everyone that this is a real powerful, it's shocking, it's a disruptive thing we're all experiencing. People are getting sick, and this is really devastating for a lot of individuals and families really around the globe. And our society needs to react, and it's a scary and anxious time for a lot of us. It's truly affected our emotional, our financial, and potentially our physical well-being. My next comments are not at all an attempt to downplay or to be cavalier about what's going on, because this is real. Mm-hmm. Second, I can't predict what's going to happen tomorrow, next week, next month, or even over the next year. Really, no one knows. Lots of really smart, well-spoken experts on TV, the radio, and newsprint don't know either. I do believe that recent events are going to affect the economies around the world. It has to. Financial markets have already been affected. I expect ongoing volatility, and I think our listeners and clients should expect the same. And remember that those smart, well-spoken experts aren't good about predicting the future. They just don't have a good track record. None of us do.
Yeah.
So one message I really want to get out today is that we've been through this before. Not exactly COVID-19, but we've had other significant shocks to the financial markets in the past. And frankly, in the past, markets have always recovered. I've been doing this kind of work, planning and counseling and advising with clients since 1984. Long time. Mm-hmm. And over that time period, I've experienced three major bear markets: 1987, 2000 through 2002, and 2007 through 2009. And frankly, there's been a lot of other short-term shocks to our economy and to the financial markets. So past performance does not predict the future. But I will say that in the past, markets have always recovered from previous highs, or two previous highs. Mm-hmm. So I just want people to remember how we felt in the days and weeks after 9/11. Mm-hmm. I remember that sinking feeling in my belly. There was real fear. There was real anxiety. It was a different world after that date. And I'm not comparing the events to what's happening now. I'm just comparing the feelings that we had. And I think that's just important to remember. I remember how we felt in late 2008 and early 2009. The economy was having a very difficult time. Equity markets were down almost 50%. And again, fear and anxiety. But we recovered. It took some years and a lot of work, but we recovered. So at times like this, is fear and anxiety are normal. We're human beings, and we're going to feel that anxiety. So I want to talk just a little bit about kind of behavioral economics. And I did a podcast a while back. It's episode 8. Wealth is in the details, and its title was Financial Decision Making Isn't Always Rational. And as we're feeling significant fear and anxiety, please think about 3 real important human biases that impact our decision making.
Mhm.
And I'll quickly go through this, but the first is recency bias. It's our tendency to focus on the things that are most recent and to forget about the past. We feel the most recent experiences much more than we do things that happened a long time ago. And that's why I think it's important to have an historical perspective about past events.
Mhm.
So the second bias we'll call anchoring. And when we're anchoring, we tend to rely heavily on pieces of information that may or may not really be relevant to the moment we're in. So just for an example, we might focus on the value of our portfolio as of a certain point in time, maybe the high point, maybe December 31st, 2019. We're looking at those values and we're saying, yikes, it's really scary and frustrating that my portfolio has dropped so much from 2019. But I think it's important, again, back to that recency bias, thinking about what values you had a year before, December 31st, 2018. And over that 12 and 15-month period compared to where we are now, we're really not that far off from where we were.
Mm.
And we want our clients to really focus on their long-term goals and their objectives over the next 10, 20, and 30 years.
Yeah.
And the message here is to focus on your long-term, not necessarily the short-term values of your portfolio.
Mhm.
The third bias, which is I think the most important, and here it's called loss aversion.
Mhm.
And this bias is the theory from a psychological perspective. The pain of loss is about twice as powerful as the pleasure of gain.
Mhm.
And this is such an important theory because when we think about how we react in lots of aspects of our lives, the loss of a loved one, the loss of an important heirloom, the loss of a job, these feelings of loss are really powerful and strong. And oftentimes the pain of that loss is even greater than the feelings of pleasure we get as we remember our loved ones or that heirloom or the job we've lost. Think about the pain and fear we feel right now after our assets drop in value. We might anchor on that most recent peak, and we may focus on the recent memories of markets gaining in value, but we don't really think about that this has happened before, that markets go up and down, and we know that market volatility is really normal. So I just want to stress how these feelings we're experiencing, these great shocks, are real,
Mhm.
and we're going to see them play out over time. It's important to have this historical perspective. To me, it's comforting to know that this too shall pass, and our world will continue, maybe different,
Mhm.
but we'll move forward.
Yeah.
And lastly, if we recognize that we're susceptible to these, natural human biases, we're more likely able to focus on the things that we can control. It helps us focus on rational thinking and actions, which will really help us focus on meeting our objectives, those long-term objectives,
Yeah.
whether it be retirement, our kids' legacy, those are the things we should really be focusing on.
Absolutely.
And so I just want to end by stressing how important it is to focus on the things that are so important, which are, are we staying healthy? Are
Mhm.
we there with our loved ones, supporting them? We try to avoid letting the emotion, the fear, and the anxiety drive our decision making, especially when it comes to our portfolio. If your portfolio was positioned appropriately for the long term, even just 3, 4, 5 weeks ago, don't imagine or don't think that you absolutely need to make changes to that long-term perspective. You'll get your goals. It just might take a little bit longer, but stay focused on the things that are really important and that we can control. Stay healthy and stay safe.
Peter, thank you so much for taking the time to do this. I really appreciate it.
Eric, I want to say just one more thing, and here, really speaking to my clients, please reach out. We're available at the same telephone numbers, 617-728-7433. We're available by email. We're working. If you need to be comforted, if you're concerned, if you want us to rerun or look at your overall planning, please reach out and speak to us. We are available. We are concerned about you and your families, and I really do look forward to speaking with you soon. Thank you.
Thank you for listening to the Wealth is in the Details podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Lincoln Financial Advisors Corporation. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Peter Raskin is a registered representative of Lincoln Financial Advisors. Securities offered through Lincoln Financial Advisors Corporation, a broker, dealer, member SIPC. Investment advisory services offered through SageMark Consulting, a division of Lincoln Financial Advisors, a registered investment advisor. Insurance offered through Lincoln affiliates and other fine companies. Raskin Planning Group is not an affiliate of Lincoln Financial Advisors. Lincoln Financial Advisors Corporation and its representatives do not provide legal or tax advice. You may want to consult a legal or tax advisor regarding any legal or tax information as it relates to your personal circumstances.